More on the edge. Okay. I was trying to figure out how I was going to rebuild my wealth that had disappeared in about about 4 months. You didn't realize how bad it was until Lehman went bankrupt. The evolution of private company exchanges has been fascinating. It really accelerated during the Great Recession around 2008, 2009, when private markets were more stable than the public markets. Institutional investors and high net worth individuals wanted to allocate asset investments to maximize their portfolios. There were interested buyers who didn't have enough private equity exposure and wanted to get more, or people who were trying to take advantage of a valuation downturn to invest in a particular private equity fund. To do that, they looked at the secondary market to access private equity. Back then, it was often the case that LPs would have to do their own legwork to find other LPs that would buy or sell their shares on an individual basis. But that's inefficient when there's very little transparency and very little information about private companies. And this is why the emergence of the private company exchanges, such as EquityZen, SharePost, Carta, and NASDAQ, among others, worked really well, increasingly using real-time technology to put buyers and sellers together to make these acquisitions, whether in private equity or venture, or directly into the portfolio company.
The trend of transactions being done through private exchanges has really grown. The trend is increasing because companies are staying private longer. In the case of high-profile names such as Airbnb, Palantir, Spotify, and Poshmark, they stayed private over 10 years. Uber is another great example of this. Uber stayed private for almost 10 years, and not only had venture capital interest, but also private equity interest invested into it. There's an increasing interest from investors to invest in companies like that before they go public, or invest in funds that are investing in these public companies. They may not want to be the first investor. Instead, they may wait to see if there's a track record for the company.
Private exchanges can work for employees who are looking to take cash off the table too. If the company they work for is going to stay private for a long time, an employee may want to sell some of their shares. These exchanges provide a way to liquidate shares so the employees or other existing shareholders have access to cash instead of waiting for the company to IPO. As private exchanges become more ubiquitous, it will be increasingly important for management teams and private equity sponsors to prepare for the complexities of this new, progressively democratized market structure. At Withum, we've been working with private equity clients for many years. Private markets are changing, and we're here to help manage the transition.